Hi, folks. So, in this episode, I'll be telling you a very simple way to trade synthetic indices. Very simple way, just only one PD array. So, one PD array by using what? One fair value gap. Only fair value gap. So, guys, I see a lot of people, making things more complicated. Like trading the synthetic indices is what very, very simple and easy. So um so in this episode, we only need what? Three things. Where is my so we only need three things. The first one, we need what? A high time frame what level. So let's take it. We need a high time frame level. So from our the first thing we need higher time frame level. Okay. We need a high time frame level. So I want this video to be what? Very straightforward, because I want everybody to get along with this video. So it's not boring, it's not complicated. Maybe with some minutes we are done and you become profitable. Very simple. So we just need what? High time frame level. In this case, I'm only using what? One higher time frame level, which is the what? Fair value gap. In this case, our higher time frame could be what? Daily fair value gap. So what do we need again? The second one, we need what? Time frame alignment. Time frame alignment. I will talk about it in a moment. So we need what? Time frame alignment. And what you need again, the third one and the final one, we just need what? Lower time frame. We can say, okay, lower time frame level. In this case, what you are looking at again is what? Fair value gap. For what? Entry. For entry. Very simple strategy. And if you can wait for the setup, at times you end up having what? 1 to what? 10 risk to reward. Like if you are risking $10, multiply by 10, that is $100. Very simple strategy. So those are the three things I'm looking at. So the first thing to our strategy here is that we need a high time frame level. In this case, we are only specifying what? We have our specified high time frame level, which is our fair value gap, right? Then the second thing here is what we need high time frame alignment. That is time frame alignment. Because we can't go blindly and enter on that high time frame because of that level. You want to see a change in state of delivery using the what? Time frame alignment. Then on that lower time frame, we need what? A fair value gap again for us to what? Enter. Very simple strategy. We are not complicating it. So we just need what? Fair value gap. So let's make an example here. So there are a lot of examples here, but I don't want to go back much like that. You can test it. Look at it. All those fair value gap, you can see how price is reacting from them. Look at it. So, but here we can apply the same concept to what? Other block. Because what I noticed in V75 is that they respect other block often than what? Fair value gap. So this is just one puzzle of the what strategy I have, just what? Fair value gap entry. So you can make this strategy with what? Other block. That is your high time frame level with what? Other block. Then lower time frame level for your entry will also be what? Other block. Very simple. You can make it with what? Breaker block. And your what? Lower time frame entry is what? Other block. Very simple. So what you need here is, okay, let me add the little things here. Yeah, this rating is okay. But I want to tell you that the specific time volatility indices will only what, like have what volatility. That is the moment, it's not what consolidated, right? Because there are certain times if you see, you see what much what consolidated in price action. So it follows time. Everything in life follows times. So it is always time, then price. For the fact that it is what synthetic doesn't mean it doesn't follow time. It follows time. So, and the best time for what my volatility is anything from what 7 a.m. to 11 a.m. That's where you have what a very what move more what movement. Then and from 12 p.m. Sorry, the time is in what New York local time. Let's set it New York local time. So anything from what 12 p.m. to what 2 p.m. So don't even engage in price. So from 2 p.m. to 5 p.m., yeah, that you have what, that is afternoon, you have what, more volatility. And another what, volatility comes at 11 p.m. to 2 a.m. late in the night. So that is like, you need to study all those time of the year that I've mentioned. Study it on your chart and you see success in your trading. So, and is different. This time is different from what the boom. So volatility indices, I think step indices, that is we have a step indices. I think they have the same time, but boom and crash have their own different time, which from 7 a.m. to 11, they will not consolidate, they will be more consolidation. But I think I'll share the time zone maybe in the next video, yeah. So here is just what a simple strategy as you are focusing on. You just need what high time frame what fair value gap. So in this case, my high time frame is the daily. So I can spot one here. Just an example. I can spot one here. Look at it. So as price is what reaching into that level, let's do this, maybe highlight it with this line. So I have what a daily time frame, right? What of my what time frame alignment? This is daily chart. Time frame alignment is that if you have what a daily from our time frame alignment, I have the table. So you should look at your what H1. Then from H1, you should look for what 5 minute time frame. So the corresponding time frame alignment for 1 hour time frame is what? 5 minutes. What does it mean? It means that if you are on 1 hour time frame, you want to see what 5 minute change in state of delivery or market structure shift or displacement. So don't mind about my tone. It's very like somehow boring, but I think the concept is what we should focus on, right? So I have a daily level, then I should focus on what 1 hour. Then 1 hour is my what mid what time frame. So I'm not entering trade here. You could enter trade here on the 1 hour time frame, but I don't want. Why? Because I can't risk that one very huge stop loss just to yeah, it's worth it, but I can't risk it. So what I'm obviously looking at is something very similar to this. Those that are trading pattern, they want to see something like this. Market structure shift or displacement, then enter using what the same fair value gap for price to continue going lower. That is very simple, the most simplest strategy. And it requires you only for you to be more patient and wait for the setup. So the setup, once it presents itself, you have what 1 to 10, minimum 1 to 10 risk to reward. I tested everything. It is tested. So we have a fair value gap. Our mid what time frame with what 1 hour time frame. And inside that 1 hour time frame, I just want to see reaction that is going on, right? I just want to see reaction as price is going into this what 1 hour daily fair value gap, right? So once we finally hit this fair value gap, price is going higher. So I'm monitoring each what candle for it to give me something like this. Look at it here. But I don't want to do that on the what 1 hour time frame, because if you look at 1 hour time frame, it actually happened here, right? You have this move to the what? Yeah, this is what actually happened, but I'm not going with that. So because if you want to enter somewhere around here, obviously you might wait for this fair value gap, right? So I don't want to have a setup like this and be waiting the whole day. No. So once price is what hitting this what fair value gap, look at the time. This is what 9 a.m. Perfect. Perfect. So you want to what, enter your trade either what from 7 a.m. to 11 and then pause. So this is 9 a.m. New York local time. This is 10. This is 11. If you cannot find entry here, then wait for what? Anything from 12, between 12 to what? No, 2. Just wait for 2 o'clock. That is, if you look at this downward, this is 2 o'clock. So let's see what happened here. If you can get entry from here, from this 7 to 11. 7 to 11. Yeah. How is 7 to 11? So 5 minute time frame. The corresponding time frame is what? 5 minutes. Let's see if we can go back in time like this. I think the data is very delayed. I wish you can go back to that level. Yeah, I wish we can go back. So since let's try 15 minutes since we can't go back. I don't know what is wrong, but we should be able to go back. I don't know what is wrong, but 5 on the 15-minute time frame, perfect. Perfect. We have everything that we need. Perfect. Look at it. Perfect. Look at it. This is what nothing. There's no anything there's no change in state of delivery within this my time window. The next time window is what? Anything from 2, yeah, 2 p.m. Yeah. So you want to enter your what trade? 2 p.m. to 5. Yeah. You want to enter your trade if there is what any setup. So if you look at this, you actually have this what displacement. Very simple pattern. I don't want to confuse you. When you have a candle like this, the market going up like this, you have this huge move to the what downside. That is what you need. So if there is what any fair value gap, that is where you enter. Then for price to go lower. Very simple. Why? Look at the context here. We are on the what daily level fair value gap. Then we had this for 15-minute change in state of delivery, which is displacement. And yeah, looking for what? Your fair value gap. Look at it. This is your fair value gap again. You just need what? Fair value gap for your bias, fair value gap for your what? Entry. So if I short here at this fair value gap, sorry, short position at this fair value gap, your stop loss will just be at this high. So I told you the minimum risk to reward for this strategy is 10. So if you're risking $10, you are targeting what? $100, which is very simple. So you'll be targeting this low because why? These are low that will have liquidity below. Price will target this. So maybe I'll do another video concerning the liquidity concept, right? It's very simple. So this is where we should what target. Why? Because there is what liquidity here. So, and you see how many? 1 to what? 11, almost 12. Please to the what? Look at how price even hit it. Look at it. Look at it. So your $10 will be what? Turn to what? $100 in the next couple of days. Very simple. So let's look at another example on, let's check. Can you do V10? Let's look at V10. Let's go to what? Our daily, 24 hours. Let's see. You see this fair value gap? If you want to do it, perfect. Then I think I'm seeing one here. You see this fair value gap? It requires you to what, be patient and wait for the setup. You see another fair value gap. Look at it here. Look at it here. Once SPY reach it, your mid to a time frame is what? 1 hour time frame. I told you I don't want to enter using the 1 hour time frame. Yeah, because the stop loss will be what? Wide. But you can do that, right? You can do that. It's just as I'm targeting what 1 to 10 risk to reward on each trade. Then and it makes sense for me to enter using what lower time frame, more than what 1 hour. So as price is hitting this level, I told you anything from what 7, that is where you should be what hunting for your what setup on what volatilities. So 7 a.m. New York local time. Look at it. This is from 7. So and price is at what our level. Go towards 5-minute time frame. So on a 5-minute time frame, you want to see what a displacement with what a fair value gap. Very simple. Very simple. You don't need what any indicator. You don't need anything else. You don't need, this is one puzzle of the strategy that I'll be showing you. And if you stick to this, you get at least one entry across all volatility indices daily. So think about it, guys. Maybe if it is one entry weekly, it makes sense, right? Look at it. This is 7 a.m. Look at it. So I told you see enter here. Look at this. Price thought that was daily fair value gap. You have this huge displacement. You see, this is how is it. Exactly as I explained it. Price go like this. Not something like this. Huge displacement. What are we looking for? Fair value gap. Where is our fair value gap? Look at it. The same pattern over and over again. So I make it into patterns so that people will what more. You train your eyes to what understand it. So you see, this was price displacement. What do you have? You have what fair value gap. That is your what entry. So you can, I swear, decided to be using what other block to other block. That is daily is other block, then your entry is what you should be looking for what other block. Very simple. But here I'm only teaching you a fair value gap. So you don't need to know everything. You don't need it. This is your entry will be. Your stop loss will be here. That is the safe place for you to place your entry. Then what do you have? I told you this strategy. The minimum you should target is what? 10R. So, and there's a way I used to target it. I'll go to a 15-minute time frame, looking at where there is what liquidity. So if you go to a 15-minute time frame, I want to spot where there is what liquidity so that I can target it. So I can see we have what a liquidity here. Why? Because look at it. We have, this is the first one, we have a liquidity here. There's liquidity below this low. There is what SL liquidity below this low. Yeah. So I can target all those guys. So the first one, let's see, this to reward is 1 to 8, almost 9. Targeting this one. Told you the minimum is 10, which is almost 10R. Almost 10R. Look at how price smash it. Look at it. So it's very simple strategy. Just copy it. You just need what? Three things. You just need a higher time frame level. In this case, we are using a fair value gap. Once price is touching it, go to your what? Mid time frame, which is 1 hour. Then from 1 hour, the next what time frame alignment to 1 hour is what? 5 minutes. Then and follow the what? Time. From 7 a.m. New York local time. Set your time. Look at my time here. This is what? New York local time. So here I can even stack position if I want to stack, because I know this is gonna be what? A huge displacement to the what? Downside. Look at it. Let me show you how to stack. Well, most people love that, right? Let me show you how to stack. Let me show you guys how I stack. So this is my first entry here. This is my first entry here. Once price move in my favor, what I will do most of the time, I will adjust this stop loss to somewhere here. Yes. Then after that, I wait for what? In this case, let's keep using our fair value gap, right? So the next fair value gap for price to tap in. Then I'll enter what? Another position here. I'll enter another position here. My stop loss will be at the same place as this. I can start 3 more position here, with your stop loss will be here. So maybe you want to risk what? $10 on this trade, right? So the first one, you go in first with what? $5. Then the remaining what? $5, you stack it along the way. Because by moving this your stop loss from here to here, it means we are no longer what? There's some percentage of that $5 that is what we use, right? Maybe $1 drop here. If it's stop where it is what? Maybe kind of $3. So here the risk now is now $3, right? So you add it to here, which is you have a buffer of what? $7. You can stack the remaining $7 here. So that even if these two positions stop you out, you still lose what? $10. That is very simple. That is how I stack, which is very, very simple. Then the next one, if I want to add to this position, look at it here. If I want to add to look at this fair value gap again. If you want to add to this position, look at it. So it means price move in my favor. Then I will now move this stop loss to somewhere around here. So, and this one to somewhere around here. Yeah. So I will now stack another position based on what I take off here. Maybe there is now a $2 what drop. So I now have $2 buffer, right? So I can enter another short position somewhere around here. Stop loss will be the same place. Look at how I'm stacking, right? So that even if this all position go against me, I will still lose what? That or $10. Then what if price go in my favor? You end up doubling what your initial target is. So our initial target is for $10 to what? $100, right? So by using this stacking position method, then you end up having what, more than $200 most of the time. And look at it. Did price hit your stop loss? No. It can never do that, right? Look at it. So it can never do that. Look at it. So This is all. I don't want you to complicate anything. Very simple, easy. Go into our chart, look for daily fair value gap, then go to what 1 hour, 5 hour time frame, 5 minute time frame, and then we are good to go. Look at this pattern. We are good to go. Wait for the setup. The time is what very important. Time of the day. I think I mentioned it. I mentioned about that time of the day that the volatility indices tends to move. So study it and see you in the next episode. Thanks.